Welcome back, guys, to another video. As you can see, we are on gold on XAU USD. I am on the 4-hour time frame as I focus on swing trading. So here you can see on the H4, we have a 1, 2, 3 week low. The market had a little fake out of that low and we pull right back into this 3 week range. So as of now, we are still considered in a consolidated market. I would want to see the market get over 1796, 1797 area here, which is the resistance. I want to see the market break this, retest this, and then push up to go long. Uh, my target profit areas would be around 1900 again. If we go back to the daily, this was a major area of resistance. Um, if we get over that level, then we'll be looking to get back into these 2000 highs. We can see that the market did push up off of the weekly time frame off of these lows. So we had the weekly lows here. The market pulled back into this area, which is probably 61.8, 78% of the fibs. We also had a level of here with this breakout here. We had a breakout of resistance here on the daily time frame, and the market is now finding this level of higher lows as a level of support. So I would want to see the market get back over 1796, 1797, which will be breaking this area of resistance for us to get a push back to the upside. And my targets would be back around these 1900 areas as the previous week high. And if we breach that high, then we could consider the market going back into the 2000 ranges of price. But if we look at the uh, downside levels of what the market can go to, of course, we had this area of support at 1674. The market is rolling over right now. We had a huge weekly engulfing candle coming off of this 1900 level, which was our previous week's broken level retest, and then the market rejected off of that to find the 1675, 1676 lows. Uh, we are creating a higher low right now with this pullback, which again is maybe 78.6 percent retracement of this entire move. If we pulled out the fibs, if we would see lower prices here, more selling pressure, then the market could get back and retest this 1675 area. If we break that to the low, then I would be looking for gold to get around 1450 to continue to the downside for a retest of these lows around the 1450 area. But we are in a major uptrend on the weekly. If we put a trend line, you can see that the market is trending up. At our 1, 2, run it through. Zoom in, as you can see, 1, 2, run it through. The market is bouncing at this level. So in order for us to get short, we would need to break these higher time frame trends and the overall market trend. But I can just see the market pushing back up off of this level and maybe creating new highs around 22.5. I mean, 2,500. We can see the market probably pushing up into that level. Last level was 2076, I believe, was the high. We can just mark it off and see what that high was. 2072.31, according to Hugo's weight. Uh, so I can see the market pushing back up and getting back to retest those highs if the market wanted to roll over. But with how the economy is going right now, I see, the U.S. economy collapsing, and that will push commodities up. Price of goods will go up. Price of commodities will go up. Uh, so I do see all going back into a uptrend because you can already see a lot of drilling jobs coming back on the scene. I am a former petroleum engineer, so I get a lot of job offers coming into my email now with a lot of drilling, fracking jobs that's starting to pick back up. So the price of oil is up. Anytime the oil is over, $50 up upwards of 60, $75, then they can commence to drilling and make a decent profit on that. So every time the market is squeezed, then the drilling tanks, and then the all industry takes a huge blow. It's massive layoffs, et cetera, et cetera. But with the economy going down and the price of goods will cost the consumer more to be able to pay for those goods, and that's going to drive the price of those commodities up. Gold will go up because as the economy crashes, gold is its own currency, so its value is now stronger because the dollar has crashed. So things like cattle, corn, oil, cotton, all those things will go up because now they will be, you know, at a higher demand for the supply. So those are the type of fundamental things that you can pay attention to also pay attention to the trend with your charts to see a better bias of where the market is going to go. So I am overall bullish on gold to continue to the upside. Again, like I said, if we break this trend line, because you can see that gold did fail to go higher here, but the overall trend is up. So we really have not created a lower low from this point here. So we need to create a breakout of those lows, a retest as this support would then turn to resistance and then catch the continuation back down to, like I said, the 1450 area. So that's what we'll be looking for this week. Of course, you know me, it's simple for me. I put on my trend. Trend line was broken here. We had a breakout there. I still want to see price get above this consolidated range of price before I can say yes, we are going to go long. This has been playing as a major area of resistance for the past 3 weeks. So I want to see a true breakout of that area, a retest, and then I will look for positions long after we get above these highs. So again, just pay attention to what price action is telling you. Uh, Price action is saying that we are in a long term uptrend off of the weekly and monthly lows down here. Price is steadily climbing up. We have one, two, uh, looking to push into our third push to the upside. As we know, the market moves in cycles and waves. So um, I am, like I said, bullish. If we go to the daily time frame, we can pull out our fibs for more support. So we had a push up from here, and that will give us a 61.8, 78.6 fib retracement area. If we continue to get upside from here, which is looking good. We had this double bottom in here last week's low. We retested this low into uh, a nice little bullish momentum to close the week out. So again, I would want to see the market to get above this level. We could see rejection here, another retest to get another fake out into the lows to entice these sellers to keep going short, and then we get that rejection. Or if we then breach this zone of price, then we could see the market then continuing to go, further to the downside, like I mentioned earlier in the video. And these would be the targets that I will be looking for. A retest of this level one more time, and we can see a bigger macro, double bottom off the weekly time frame, or we can see the market breach this. I want to see the market make a structural move, retest to the top side, engulfing, come on down 1450. Look out, because that's where she'll be going to. So gold, just like every other chart, yes, gold is extremely volatile, and she's hard for some people to trade, uh, especially when it comes to swing trading, because she all over the place, as you can see on the lower time frame. So if you're not, swing minded, uh, then I would suggest you to try to swing this pair. But um, overall, like I said, I'm bullish and I'm looking for upside potential. But if we do get below these levels here and make a decent amount of candlestick closes, I want to see 2 to 3 closes on, the 1 hour, then a pullback into this level. I'll put my, micro trend line on the H1, H15. Um, Minutes, H1 down to the 15-minute time frame. We break that on a, pullback retest corrective move of this breakout, and then we get shorts. Then I would take shorts to the downside back to here as my target one, 1450 as target two, long term swing trade to the downside if we continue this bearish move. But overall, again, we are bullish. So the trend is your friend. Look for bullish moves into the week. Gold likes to give nice breakouts on those Sunday to Monday rollovers into, the London, New York range. So from that London to New York range, you can find some good pushes on gold, especially once it's the beginning of the week. It likes to break out early in the week, then it'll consolidate maybe through Wednesday, and then it'll break out for Thursday and Friday to continue its move to the upside or to the downside, depending on where you found that weekly move at. I like to trade everything off of the 4 hour. 4 hour is nice, crisp, and clear. You can see everything. 4 hour and daily is pretty much the same thing. You catch the daily breakout, you use the 4 hour to look for the weekly highs, weekly lows. As you can see here, we had this weekly high. The market then crashed off of that weekly high right down into I caught in micro pips. So that's 13,853 pips, or that's 1,300 pips to the downside. That is a mean, massive swing trade you could have caught with, just basic tools, and the understanding of price action and how to analyze the markets using that price action. Price action is key. You don't need all these other indicators and all this other stuff. Yes, you can use indicators to help you uh, in the charts with seeing things and how to hold price, or where you can take entries at based off of, a moving average crossover telling you that the bulls or the bears are completely, out of the market, so on and so forth. But the number one thing that I pay attention to is price, because price cannot lie to you. Indicators are lagging, so I don't want to use those to say 100% that this trade is going to go this way. I want price to tell me, because price only can tell me where the market is going, and price is going to go where the market has previously been to before. So if you understand that, and you understand how to find these price action moves, then you're golden, because that's what the market is going to move based off of. price is going to show the way, price is going to lead the way, and price is going to be what pays. So lock into price action, understand price action, and you will become a better trader, at least 10, 15%, better. And that's just, a low ball figure, because I only trade with price action, trends. I use a trend, of course, and then I do use moving average crossovers in certain instances to tell me how strong the bulls or bears are at those levels. But for the most part, I want to see a clean chart because price is going to give me everything I need to know, and then I use those other things as confluence to tell me, yes, you are correct. Yes, the price is flowing this way. Yes, the momentum is going to keep on carrying this trade. Yes, you can continue to hold here, or no, you need to get out because now the momentum has swung here. So I do use moving averages to tell me certain things about uh, my trade once I enter the trade, but 90% of my trade is based upon the price action. So again, that is my analysis for gold. I see us going bullish to the upside, uh, potential to go back to these highs, break these highs, be a nice higher low, push off of this weekly double bottom, weekly low. We can get back into that level again and then kick up again off of a overall macro um, position. Get back here, get into the macros, get into the big money positions, and then we push up here. Or we can be on the micro level here on the lower time frame where we have already started to push up off of this zone, this price action zone here. We started to push up off of this, which was previous resistance. It was heavy resistance, broke out, came to new support. Now it's retesting that support one more time. Can we get higher than 1796, 1797 retest and continue? Or if we break these levels, then again, I'm looking for sharps back to the previous levels below. So that is my analysis for the week on gold. Again, take this information, use it to your advantage. Happy trading, happy hunting. Let's go kill it this week, guys.